I've called this lesson Dangerous Words. I'd like to share this with you. It doesn't matter whether you're a property developer or any sort of investor. If you're new to something, there are words you hear all the time. The same with stocks and shares and bond investing. You hear people say when they're making money and things are going to go on forever, but this time it's different. I.e., every other time the market's boomed, it's crashed, but it won't do this time. How many times do we hear it? History does repeat itself. It always repeats itself to a greater or lesser extent. If you look back at all the great investors from all walks of life, not necessarily property, they have learned that their markets are cyclical. The biggest lessons I've learned, there's 5 of them really, and I've learned a lot of these off older experienced developers and investors that I've been lucky enough to spend time with, and I'm grateful enough now to call friends, and some of them are very, very good friends and confidants as well. So booms never last. They don't. People think they last forever and things will go on, and it's quite dangerous because the longer a market goes up, people think, well, it's got to keep going. It just has to keep going, and if it doesn't keep going, it'll just gently plateau off. Well, that doesn't happen. We get overconfidence, and the next thing we know, the market turns down. People are in denial. It's a psychological trait. People go into complete denial when the markets start collapsing around them. They don't think it's happening, it's not really happening to them, and it'll all be better in a few months' time. And the lesson from all this is, even as you take advantage of booming markets, you've got to be prepared for the next phase of the property cycle. During the last property cycle, most investors had no downside coverage. Even the banks didn't have any coverage, as we know. But the interesting thing was a lot of them didn't have any upside coverage either. So they hadn't maximised what they could have made. It's quite incredible looking back at it, and there's a lot of lessons to be learned from that. One developer that's been doing it for donkey's years said to me, you can never buy at the bottom and you can never really sell at the top, but you try and buy when the market's lower and sell when it's higher, and that's where you make your money. You're in and you're out quickly, which we've discussed before. Don't be stuck with stock for years on end. You really don't want it. The second point is you need to beware of negative people, because on the one side you've got people that think the boom's going to go on forever. On the other side, you've got people that tell you it's absolutely terrible, it's going to crash and everything's overvalued. And it's very difficult to tell what the reality of a situation is when you've got all these conflicting emotions, if you like, conflicting advice. Everyone you ask will give you an opinion, but very, very few people will really know exactly what's going on. That's why we show you in a later lesson to develop this circle of friends, circle of trust, if you like, where these are people you go and talk to who know what's going on. So you've got mortgage brokers, you've got estate agents, you've got builders are quite useful. You've got those type of people who are actually in the business, knowing what's going on all the time, and they give you an idea on the ground of how things are panning out. And then on the flip side of that, you then can look and read the papers and get an idea about how the economy is likely to fare, whether interest rates are going up or not. Very important to build that circle of well-informed advisors, because that'll help you be ahead of the game at all times. And what you find is after a while these people start coming to you and asking you what's going on, because you're the link between all those different skill sets. And you put it together and you'll make a decision on where the market's going based on the information you've got from that group of people, that inner circle, if you like. Third lesson here is follow a system. Smart investors from all walk of life follow a system, because if you do that, it takes the emotion out of your decisions and ensures you don't speculate. And speculation to me is like gambling. It may sound really boring, but believe me, it's profitable and it's predictable. You can predict you're going to be making money. You might not make as much as you could. I've recently sold 2 pair of semis, actually, new build houses for £240,000 each. I know full well I could have easily got £250 for them. But when I started building them and I had people come around and buy them, I thought, no, I'm going to make this predictable. One of them's made me probably 60,000 and the other one 80,000 profit. I'm going to lock my profit in. I took a non-refundable deposit off both people, and they instructed their solicitors and I instructed mine. So I knew that I was locked in. Now, if the market had gone down, they'd have lost their deposit if they'd have pulled out. Fair enough, in this particular occasion, the market's gone up and the properties are probably worth at least 250, maybe even a bit more. But my system has worked for me because it's protected me from my downside risk. In effect, I've insured against it, if you like. Warren Buffett once said, you only find out who's swimming naked when the tide goes out. So those people, when the tide goes out, didn't have a system that works in the market conditions, and you will get caught with your pants down if the market changes. Don't be greedy. Just follow the system, make your profit and move on to the next deal, because there's always another deal out there. The fourth lesson is how to make $1 million, and I've said this before. If you want to make $1 million in property and you don't know what you're doing, start with several million, because it'll soon become just $1 million. Property is a pretty long-term investment, but people very often will chase the fast money. They want to get the quick deal. They want to build up the big buy-to-let portfolio in 2 or 3 years, which is going to make them 40 or 50 million pounds. Wow, it rarely happens. You read about it occasionally, but you never hear the truth of what really has happened, and you don't hear about the thousands of people that have lost money and that are struggling. And I see it so often when I go and buy things where people have bought these buy-to-let properties and they're underwater with them. They're being supported by the bank, or they're having to both, husband and wife work jobs just to pay the bank back on their buy-to-let, and they end up in rented accommodation themselves. It's a mug's game. There are no get-rich-quick schemes out there that I'm aware of, and if they are, by the time they become common knowledge, they no longer work. The old saying is, if you see a bandwagon, it's time to get off it, not to get on it. What I can tell you, and I can prove to you, is that being a property developer, especially if you're using options which cost you next to nothing, is a surefire, risk-free way of making a lot of money. But you won't get really rich really quick. You might get lucky with a few of the deals you do if you get the right bits of land and you get the right planning on it. But what you can do is you can make good money year in, year out. And that to me is important. I don't want to make £3 or £4 million next year. But I'm very happy to make £300,000 or £400,000 last year, £300,000 or £400,000 this year. And I know full well next year, because of the building plannings that we've got going at the moment, I'm going to make 500 or 600 next year. Well, I think that's enough for most people to live on, don't you? Final point is stick to the basics. You're in the property investment business. But a lot of people during boom times go and buy in other areas. So, for example, if you specialise in building blocks of flats, cheap starter homes and the like, why go building luxury £2 million mansions in the countryside? Because you don't know that market. Stick to what you know. Stick to the basics. Don't get sidetracked. You'll get introduced, as you make more money, believe me, you'll get introduced to all sorts of things by people who claim to be your friends or your advisors. They could be finance, they could be offering mezzanine loans to other developers, they could be tax avoidance strategies. Smart investors do things differently. You make an educated investment, you follow your system. If you do that, you will make a lot of money over the long term, and you'll have an enjoyable time doing it. And remember, this time it isn't any different.